Hey, Crypto Degens. Today, we're diving deep into crypto trading strategies for beginners. You asked, and I'm here to deliver. Let's decode how to navigate the crypto waters without sinking your ship. Crypto trading can be as volatile as a stormy sea. Knowing the ropes is crucial for every beginner. With recent slumps and scandals shaking the market, it's more important than ever to trade smart. Let's start with the basics. What is crypto trading? It's buying and selling cryptocurrencies in the hope of making a profit. Recent developments show the market's volatility. Robinhood's Q4 earnings took a hit with a 38% drop in crypto revenue. The SafeMoon saga is a stark reminder of the risks involved. Braden Caroni's sentencing for a crypto scheme highlights the importance of diligence. Strategies for beginners. Start small. Don't put all your eggs in one basket. And always do your research. Technical analysis versus fundamental analysis. Know the difference and how each can guide your trading decisions. The importance of a solid exit strategy. Knowing when to cut losses or take profits can save you from significant downturns. Viewer question answered. To avoid heavy losses, set stop-loss orders, diversify your portfolio, and keep abreast of market news and trends. Example of starting small. Instead of investing $1,000 in one coin, spread it across different assets. Real-world application of technical analysis, using price charts to identify patterns and predict future movements. That's a wrap on crypto trading strategies for beginners. Remember, the crypto sea is full of surprises. Navigate wisely. Drop your questions below for more deep dives. Here's the deal, fam. Despite the gloomy news of Robinhood and the downfall narratives around crypto spaces like SafeMoon, there's still treasure to be found in these waters. But like any savvy pirate knows, you gotta have the right map. Speaking of maps, understanding the ebb and flow of the market is crucial. Remember our deep dive into the basics? It's not just about buying low and selling high, it's about knowing why and when. The recent 38% dip in Robinhood's crypto revenue and the SafeMoon debacle underlines the importance of not just sailing into crypto waters blindly, but having a seasoned navigator at your helm. That's where your research and analysis come in, mateys. Now, diving deeper into the strategies, let's talk risk management. Starting small and diversification aren't just buzzwords, they're your lifeboats in rough seas. And as for stop-loss orders, think of them as your compass, keeping you on course and preventing you from straying into the storm. Technical analysis isn't some mystical chart magic. It's about recognizing the signs and signals that the market's currents and winds are changing. Fundamental analysis, on the other hand, is understanding the sea you're sailing in, the overall health of the crypto economy, the potential impact of regulatory changes, or a new blockchain innovation that could change the game. And let's not skip on exit strategies. They're as critical as spotting a safe port in a storm. Whether it's taking your profits before a downturn or cutting your losses before they sink you, knowing when to retreat can be as crucial as knowing when to advance. So, what's the takeaway from our latest deep dive, informed by the recent tumults in the crypto sea? It's that while the waters may be choppy, with the right strategies, there's still plenty of opportunities to find your fortune. By staying informed, diversifying your holdings, mastering the arts of technical and fundamental analysis, and setting smart exit strategies, you'll be well equipped to navigate whatever comes your way. Remember, the crypto sea is full of surprises. Navigate wisely. Drop your questions below for more deep dives. New deep dive videos are created once per day based on the most requested topics from comments. Let's keep this ship afloat together, crypto family. Till our next adventure, keep those sails high and your treasure chests locked. Over and out, Crypto B.